The following video is the first episode of the Hedge Pod series with Josh Cohen, CEO of one of the fastest growing oil companies in the United States, Vision Oil and Gas, and Oilfield Services, ticker symbol AZRH. Please leave your comments and questions below this video, and I hope you enjoyed the episode. Josh, welcome to the pod, Series 1. It's great to have you here. Thank you so much for joining us. I'd love to start by talking a little bit about your recent $8 million acquisition of the oil wells in the Permian Basin. 4,000 acres, 144 oil wells. How did that come to fruition, and what was the deal structure like?
Yeah, absolutely, Jonathan. Actually, if it's okay with you, we're going to also talk about the other two acquisitions. So, right after that, we also announced that we bought another 500 wells. And I believe it, I apologize, I don't have the numbers in front of me. Let me just pull it up really quick. I believe it was another 8,000 acres or to 12,000 acres, which puts us at about 40,000 acres, 35,000 of which is in the Permian Basin. And that puts us at over 1,400 wellheads. Um, uh, 1,400 are in the Permian Basin. We do have 35 that are in South Texas, spread across about 5,000 acres. Um, but yeah, I'm an animal when it comes to data and analytics, and so I know every lease in America that I want to buy, and I use algorithms, I use softwares, I use automation, and then I tell you what, I just pick up the phone. And it's funny, it seems like the deal is almost always done before I even pick up the phone. And not everybody answers, but we've got we've got thousands of leases that we go after. Our buying criteria is very simple: strong supporting historical production on lease, even stronger supporting historical production surrounding the lease. Okay, and then understanding the sophistication of secondary and tertiary recovery methods that have been used by those that have had success within the area, and then go after as much deep rights or as little restrictions as possible. And then just make sure you lead every acquisition with a strong sense of diligence, especially as it pertains to geology and engineering. And yeah, we get these deals done pretty quick. We've developed a really good name in the industry, and yeah, that's how we built this company. A lot of people think that we built this overnight. We didn't. We bought 40,000 acres and over 1,400 oil wells in the Permian Basin. We did not do it overnight. We did it in the past 5 months. So, these things take time, and I think that we're gonna more than likely double our acreage position here pretty quickly with a play that we're about to close on, most likely close on in South Texas. I'm going to fold in my buddy's company. He's doing about 12 million a year in revenue with the majors as far as dirt work, well pad, well construction, a space that I've been, very intimate with for the past 10 years. So yeah, things are going in the right direction. We're going to also more than likely tuck in a little drilling company that's got 6 rigs with at least 1,000 to 1,500 horsepower. So yeah, it all came to fruition. Last year at this time, I had an idea, and then I had to pivot quickly and focus on that idea. And yeah, it's been a fun ride. So
And like you said, it's definitely not built overnight. So take me back 10, 15, 20 years, how you really got started in the energy space, and what was your journey from when you even graduated college to where you are now?
yeah, so yeah, let's take a little trip down memory lane. So I it was 2008 and the oil price collapsed, and I just completed my summer internship in the Pittsburgh office at PwC as a public accountant. And they announced that they were not going to make any layoffs. So I was grateful to go into very unstable, uncertain economies, a lot of which, hate to get political, a lot of which was driven by the corruption of the Obama administration. And so you had a lot of high volatility and fluctuating oil and gas prices. And so, that was a different time in the industry. I went more on the gas side out of college, and I inherited my pop ops working interest in Ohio, Western PA, West Virginia, a little bit of Kentucky stuff. And I inherited his farmhouse, and me and my mom sold it. And then I just bet what I won on Rex Energy, and I also started auditing. My audit client was PDC Energy. They had just gone public. They had about a 500 to 800 million dollar market cap, and they were acquiring all their limited partners' interest out through a buyout through their stock. So that definitely set the stage. And then Rex Energy also set the stage. The ticker symbol was REXX. And they were based out of State College, where I went to school at Penn State. And they just went on a tear. I mean, A&D machine shop in the lower middle market. Um, they successfully sold companies overnight and just really hit the nail on the head as it pertains to the right way to run E&P and services under the same roof. Services, where companies make the mistake of fully integrated oil and gas companies, is they buy service companies to self-service.
Right.
Biggest mistake any company can make. You buy service companies with great contracts and great revenue. You don't touch or disrupt that revenue. You supplement it, right, to decrease your cost of services from an AFE perspective. That's how you make a killer integrated oil and gas company, and you're selective on what services you in-house. Perfect example, Oxy. I've done, combined with all my partners, about $100 million in sales over the past 7 months to Oxy. Okay. Oxy just sold their chemicals company for, I believe it was like 10 to $12 billion. And, and it just goes to show how much value is in both the E&P side and the services side, especially in the Permian, if you play your cards right. And so that's what we're doing.
Wow. So Rex Energy, for a lot of people who don't know, that was a company that is no longer a publicly traded company. What was your research process like, and what gave you the conviction to even invest in a company like that in the first place? Because early on, they were pretty small when you were an investor.
Yeah, they were. You know what? I say being around the right people, and at the same time ignorance, okay, and also knowing how to do research, but at the same time, government really kind of pointed me in that direction, and then ignorance matched with God is, it creates luck in that circumstance, right? Even though I calculated what I believed, was driving it. It really was God. So my buddy told me about Rex. His buddy was a petroleum engineer. We all did fairly well in college. We weren't just sitting around, reading and studying. We were always looking for ways to make money in an ethical entrepreneurial way. Some of them invested in consumer debt. Okay. This is in college. So these are my friends. So they pointed me in the direction of Rex, and I got lucky. There's really nothing else to it, right? And at the same time, gas prices were very high, and that's what makes gas so attractive. Is that if you look at the discrepancy on a global scale, and you look at Europe, and you look at the rest of the world and how high their cost for gas is compared to the United States, it makes you realize gas is it got overflooded. It's still balancing itself out from a supply demand perspective, but that's a global economy. Same with oil, you know. So there's a lot more gas in the Marcellus Shale, whereas in West Texas there's a lot of oil. And so I started in gas, and then I found oil, or oil found me, I should say.
So, State College, you and your buddies are doing equities research. You find Rex Energy. You end up doing really well at PwC, and that ends up actually being your main position at PwC, which was in energy, which you really got pulled to. What happened after the PwC energy deal, and what did your career go on to after that?
Yeah, it was really a crossroads. Like, regulation around accounting continues to increase. And I am a very big advocate for regulation, which probably sounds funny because I also manage micro cap companies. Most people would think that I was not, or a fan of regulation, or that I was anti-regulation. No, I am a huge advocate for shareholder transparency, and I believe that transparency costs a lot less than people realize. It's a lot more accessible. And that's why I'm also a big fan of the OTC market, because it allows small businesses to shine a light on, from a transparent perspective. And let's also keep in mind, right, going to a larger exchange does require overhead and admin to be taken out of the cash flow of a company that's trying to grow. That can be constraining, but we found a really good system. PwC, accounting regulation, long story short, I was going to be faced with one of two things. Either I pass my CPA, and I'm not a good test taker, even though I'm a phenomenal accountant. I'm hate to say it, I'm just as knowledgeable on accounting as most really well qualified CPAs. Okay, maybe more so in some cases. I wasn't well suited to pass my CPA test. Not wasn't for lack of effort. I was just too focused of learning on the job, and so a crossroads came because I loved my career at PwC, but I had to make a decision. So I went into corporate FP&A and then ultimately took a CFO job at a construction company at the age of 26. Um, and so I'm day trading Rex Energy, and I'm the CFO of a construction company that was owned by a private equity firm, and I learned a lot, and then when I found the intersection between that construction and oil field construction or oil field services, I just dropped everything I was doing. I lasered in, focused, and then started learning how to operate E&P or actual production. And because of all the relationships and all the goodwill I created as an advisor to business owners, they began to trust me. And same with the capital markets because of my advocacy for transparency. Um, and so, yeah, that's kind of what led me to where I'm at.
Right. So you, within your career, you've also helped launch multiple companies become public, whether it was on the OTC markets or even the NASDAQ. Um, how has your career helped you define, where you are today? And what lessons did you learn as a consultant and an operator and a market advisor that helped drive your investment decisions as an entrepreneur today?
Yeah, it's good. Okay, so what I learned was I was an investment banker and a strategic advisor. So what I learned was corporate restructuring for small businesses that was successful, that led to win-wins on all sides of the table. And then what I learned was the court process and the legal process and the way the law works for restructuring. And then I own a marketing agency, which is really more of an investor relations agency. And I saw the value in social media. So being able to combine all that with my passion, oil and gas and blue collar industry, blue collar trade, blue collar business, um, we were able to create a value proposition that really helped a lot of people. And the retail shareholders, they saw that, and they believe in what we've done. And it's not been easy. I mean, we've had our ups and downs. We haven't spent a dollar on marketing or investor relations. That said, I did spend, the past 10 years building out my organic audiences on Facebook, LinkedIn, Instagram, X, my mailing lists. And so, that's helped. Kind of, I would say also too, the fact that we were able to restructure companies successfully in a way that created value for them and retail shareholders at the same time. That was not a new entrant to the market, but saw the opportunity. And that said, we don't like debt. We have no debt. We've taken in no outside capital. I bankrolled this all out of our cash flow, and it's been good. We're very happy with what we've built, and we see a really good road forward.
For those people who are watching right now and may not understand taking outside capital and taking capital investment from a firm like private equity or venture, why has your success been so well without private outside capital? And why do you think that's going to continue to play a pivotal role going forward in the way you do business?
Yeah, no, I appreciate that. Okay, so it's there's a few answers to that question. Number one, by taking outside capital, at least as a small business, I'm more than likely the best bet that I would have is through a family office or private equity. And family office and private equity, they have come to us A lot of them came and think about like over 40 came and offered 50%. They wanted 50% of the company for $10 million. And that didn't work. That math didn't work for us. We know that we're sitting on billions of dollars of oil reserves. Um, and so I said, no, that won't work. But appreciate it. And then a lot came back, and over half offered uh, $20 million for 50%. And I said, nah, we're just too far off. And I appreciate it, but we're just too far off. So, that's the one difficult thing. A lot of people rush to take capital. And I learned from one of my mentors, Mike Shaver, who owns 300,000 mineral and surface acres in West Virginia and Kentucky, a little bit in Pennsylvania and Ohio, and 3,600 wells. He taught me the importance of patience when it comes to the capital markets, because there's no shortage of capital. Even though it might feel like you need to take some outside capital, you're better preserving your cash flow. So we've worked on that mantra, and found the money in the field, as opposed to finding the money in a what I would call maybe like an active or more administrative type of investor, institutional investor. So we're open to the right partner. We are 100% open, but we're not going to undervalue ourselves. We do have a pretty strong market cap. We believe that we're undervalued in the market compared to stocks like New Era, which is a great company that's well positioned. We
Yeah.
think they're appropriately valued. We think that we're a very good comp, almost direct comp as far as size. So that's why we're not shy about thinking that we're undervalued in the market. That said, we are open to the right investor, one that's growth oriented. Um, one of the biggest mistakes you can make is taking the wrong capital. So, at that said, anything that's change control oriented, we have no reason to sell. We actually don't even need anybody's money. That's the nice part. So we're only reliant on ourselves and the field and the work that we put in, and the team that we built, the crews that we built, the outsourced service providers that trust us and work with us and like working with us and see our vision, the sellers or people that we buy assets from. And so our model works. And I think a big part of that too was not being selfish or greedy. So what I mean by that, I haven't issued myself any common shares since I started down this. Most CEOs do that. They issue themselves a lot of shares right out the gate. I have no interest in selling. My shares equate to a one preferred share of the shares that I own, the control shares. One share equates to 200 common share votes. So the only people that can fire me are me. That's it. I have one partner that has the exact same amount of voting power and strength, and we see eye to eye on everything, and we get along great, and we work really well together and balance each other out. And the beauty is that the way we built this works really well for retail. That's why I always tell people the way we built this works so well for retail, because we've given retail a big chunk of the pie. Even though we might not have benefited directly by intaking capital directly from retail sees the value in our company. They understand too that we're more than likely going to get a lot of big buyout opportunities. I mean, we own just under 0.5% of the Texas Permian Basin oil wells and gas wells. There's 299,000 wells. We own 1,400. And we've done this with no outside capital. So I think that when people hear that, they start saying, wow, I understand why they're selected on capital, and looking for the right partner. So that's worked well in our favor. And I think too often in heavy capital intensive industries, companies rush to take money, not factoring in the long-term and short-term consequences from a cash flow perspective. So.
And for people who are not watching, or have never even known about the energy reserves in the United States, the Permian Basin is one of the most valuable natural resources we have in the United States. And so the market share that you
World.
have.
Yeah, I'd say the most valuable reserve bases are in no order. Okay. The most valuable reserve bases are going to be the Permian Basin, number one. We don't know the extent of Alaska, which is why our company is focused on figuring out how to get into Alaska.
Yeah.
Um, Number three is Alberta and Saskatchewan have a lot of heavy crude, even though it's outside the U.S. territories. There's been a lot of conversation and talk about them breaking away from Canada and joining. And everybody I know in the oil and gas industry is so ready for that. And then the Marcellus Shale is got to be one of the most, if not the most prolific gas pocket in America. So these three areas, plus all of the Rocky Mountain Range area, Colorado, Utah, Wyoming, Montana, North Dakota. There's so much oil and gas in America that we can fuel the world. I don't want to say forever, for a really long time.
Right.
And yeah, I'd say the Permian Basin is probably the easiest to drill oil in the world. One of the easiest places to drill in the world.
So I do want to go back to one thing. We talked a little bit about the debt structure of other companies and accepting outside capital. Because you guys have no debt, you guys have been able to run really lean and really well without taking on any debt. When you look at a company like Oracle, or even Amazon, who are taking on these huge debt loads in order to finance future operations, what's your thought on the purpose of that debt? And do you think that publicly traded companies are taking on too much debt in order just to please shareholders?
No, I don't. I actually think it's a whole different type of business model. Just like how I don't believe that the Nasdaq is well suited for small cap. I think the Nasdaq is too aggressive and is really best suited for large cap, right? The biggest of the bunch. Whereas New York Stock Exchange, and soon to be the Texas Stock Exchange, I think they'll be better suited for small cap, mid cap. It's just too predatory in very deep waters where a shark can come and try and swallow you overnight on a Nasdaq exchange. So to answer your question, Amazon, Oracle, the difference is that they can afford the debt because their debtors or their creditors rather are happy to take their stock, which would dilute the stock, but they're not taking on debt that would overly dilute the stock, and that capital influx does benefit all parties involved. So no, I don't. That's that's a level which I think many people would aspire to get to. Difficult to get there. It's funny. 20 years ago, a small cap company was $250 million market cap or below. A mid cap company started at like 500 million to like a billion. And then a large cap company was like over a billion. Okay. Those numbers have drastically changed over the past 20 years. So, and regulatory pressure has increased. So that created an issue, in my opinion, which was a lack of transparency for small businesses, but at the same time, an exchange that created liquidity for small businesses. And now you have such a suffocated market where LPs gravitate towards bigger companies that have less risk, but maybe a lower return profile. So you've got a weird imbalance right now, and then you've got an emergence of micro private equity, and that's not a bad thing. This is just a capital market. So solutions like the one we created are unique, especially when you look at the numbers. There's over 30 million small businesses in America. Now let's look at Texas. There's like 30 to 40,000 operators in Texas. Okay. Oil and gas operators. Let's just say there's 15,000 oil field service companies in Texas, probably less. Okay. So the numbers are in your favor, right? Now let's go to public company. There is 12 to 13,000 companies on the OTC. And let's say there's 8 to 10,000 companies on the big exchanges, the NASDAQ, the New York Stock Exchange. So now you're in a small pool and you fractionalize your company in a way that's created value for you and retail shareholders because we're traded on E-Trade, Schwab, Fidelity. Okay, so there's liquid value there that wasn't there before that you couldn't get cash from. So that's how I view things.
Josh, if I was an owner operator of a company that had, a significant amount of revenue now, and I'm looking to consistently grow my company, I want to become a publicly traded stock. What is the process like to even get listed on the over-the-counter markets? And what should I be thinking about when I transfer my company from being private to being a publicly traded company?
Yeah, I mean, to me, there's a lot of benefits to both. That said, private, you reach a point where you have to ask yourself, am I in this to grow this, or do I want to create an additional layer of security and liquidity that my family can fall back on while maintaining the control shares in control of the company? And then do I want to grow? These are all the questions, right? And then if all these things check the box, right, then what it comes down to is ego and pride, right? And as small business owners, we all have a lot of those, especially those that have gotten to a point where we can contemplate going public. Ego and
Yeah.
pride tells you go straight to the NASDAQ. And you know what? There's a lot to be said for companies that do that because there's a lot more liquidity options, even though a lot are predatory. Okay, especially on the small cap, micro cap side. So, okay, now let's pull it back. So, what are the benefits and advantages to OTC versus full NASDAQ? Well, I can go on the OTC. I can be public today. I can facilitate a great transaction. I can do so in a way where I evaluate the ticker and I analyze the share structure. What we did with AZRH was exactly what you want to do: low float, low outstanding share count, and that creates an ability for an ability to mess with supply and demand, right? And so then
Yeah.
stuff it with great assets, right? So that's what we did, and I could do that right now. I can probably do that 4 or 5 times with the tickers that I have in front of me that I could buy or could have a buddy of mine buy, right? So now, okay, you're public overnight. Okay, nothing's changed. Okay, nothing has changed at this point. You're responsible for uh, publishing your financials quarterly. Okay, but if you're a small business owner that's successful and can even contemplate going public, you're already doing that on a monthly basis, maybe even weekly. So nothing's changed, and now you've got to market and do some PR. Okay, so now you're just online and you're telling people a little more about you and the things that you do and your accomplishments and getting the exposure to the stock. Now the company has taken on a phenomenon where you can facilitate very large transactions that create liquidity for the seller that don't require cash. If I'm sitting on a big pile of cash as a small company, my purchase price is way higher, right? From
Yeah.
a cash standpoint. But if I'm sitting on stock, almost a blank checkbook, right, and I can evaluate the asset value that's being contributed intelligently and give the sellers a stock package that's restricted for 2 years. Now I've created a path to liquidity that's a big bang for them and something that they're really excited about and something that nobody else can compete with. So value proposition, and I think understanding markets is really critical, and then understanding your options. And I always tell everybody the same thing: if you actually are, if you're doing 20 million a year in revenue, 10 million a year in revenue, okay, and you really want to grow and go public, give me a call. I'm easy to find. Contact information. So happy to counsel for free and not lead you down a path of bad investment banking advice.
That's really interesting because you've almost flipped private equity on its head with your model here, where you're providing that
Yeah.
immediate liquidity. Why do you think that's important for a lot of people to realize? Because I think a lot of owners and operators today that are in their 60s and 70s, or maybe even someone who's in their 30s and 40s who has acquired a business via inheritance, what do you think is the importance of having that immediate liquidity versus relying on private equity for that sale later down the road?
I'll tell you exactly what the so okay. We have flipped private equity on our head because we cut out the middleman. Okay. And now I'm not knocking private equity. I have nothing but respect for private equity because it serves a very critical role in the capital markets.
Yeah.
Very critical. Okay. Which is large amounts of people with large amounts of money that want stable and consistent returns and monthly distributions or quarterly distributions. Private equity is such a smart and essential component to our economy. Okay. What we did though, we said, okay, I can get due diligence done in a day. Okay. And I'm talking about full fraud, liens, UCCs, delinquencies, court filings, adverse data searches, and then financial due diligence. So I can do that all within 6 hours, okay, of a large company, as long as I've got, access to the data that I need to see, as far as the data room is concerned, to supplement internal information, as far as cash flow is concerned. So Okay, so I can do that in 6 hours, probably less. And then I can come up with an opinion. And then I can draft a contract, and I don't need to go to the bank, and I don't need to go to anybody because I can just draft a contract and then register shares in their name, right? And so, I always consult my 50-50 partner, because that's what you do when you have a 50-50 partner. They're your partner for a reason, right? You don't just go willy-nilly and, you've got to agree on the deal, right? But that said, right, I know what I want and I know what he wants. So I go out and get as much of it as possible. Now I've taken the emotion out of the transaction. I've incorporated speed into the transaction, and I've created a compelling offer, and a solution that appeases a large group of people, right? Sellers. So I can move faster, and then I don't have to arbitrage cash flow. That is what private equity does, right? Private equity intakes a lot of capital, services that capital through monthly or quarterly distributions, mostly quarterly distributions, collects money monthly or daily or weekly, depending on the business and how it operates, right? And that's how private equity works, right? So I've removed that out of the equation. So now I can give people the offer that they want and deserve. I don't have to lowball them, right? But at the same time, I do need to right size that to actual value being attributed,
Right.
uh, right? Future cash flow and current cash flow, and so yeah, that's really it. I'd say that sums it up right there.
And specific to AZRH and your business, what you're doing now, how has regulation affected your guys' business, and what do you hope to see going forward from a regulatory standpoint and working with both the state and the federal level?
Yeah. So I work with the state and federal level every day. Tariffs, and let's talk about the realities. So the election interference, okay, meaning that the election was too farly broadcasted, and it was a really bad distraction to a lot of businesses and people and investors in America last year. Okay, that happened around July. What did I see? Running oil field services companies, um, slowdowns in drilling, and work reduction. Okay, then the election occurred. Immediately after, uh, turning wells online and in new drilling got back to the levels that feel great when you're a service provider. And then the tariffs occurred, and that created uncertainty in the market. So oil price got corrected from mid 70s, where it had been for about three to 4 years, and it corrected itself, to like high 50s. And so that had a weird effect. It hurt services after the drill bit. Okay, so the way I look at oil field services and construction, and then the way I look at E&P. E&P, you're drilling wells or you're buying wells and you're producing oil and gas. Okay, we do that. We do that really, really well as a small operator, and we have 40,000 acres and 1,400 wells, over 1,400 wells in the Permian Basin. And then on the oil field services side, I break down services into the following: well pad, dirt work construction. We do that. We do that under ATC services, which is currently we reorganized under GPLS. Okay. And then the next phase is drilling. Okay. It means putting a rig on the ground and then drilling down. We don't do that. I am two of my best friends do that really well, and I'm actually about to buy a company that does that. These service side, so well pad construction, dirt work, road work, and then drilling rig, they got affected more from a pricing perspective by the majors through their RFP process. They still have lots of work. The majors stopped turning on or completing wells, meaning that they would drill the well but get it ready to be turned on to production when prices improved. So they're still doing this, but they decreased uh, approximately by like 35%, 40% year over year on how many wells they were completing. Completing is fracking, and completing is turning the well onto production so that it flows to sales. So that's how the tariffs impacted with the price correction. So
Yeah.
it ended up creating distress or tension on the non-private equity backed service companies. And then it provided some tension on companies that oversold their cash flow to private equity or family offices on the producing oil and gas side. So it led to a good opportunity to buy both.
And so with the election, I think there's been a huge movement into alternative energy sources, especially with,
Mhm.
from a regulatory standpoint, we've seen the rise in things like nuclear, and we see firms like Microsoft making these capital investments into reopening 3 Mile Island. What is your opinion on the future of alternative energy in areas like nuclear? And what is your opinion for future administrations? What should they know going forward when it comes to supporting a lot of these businesses?
Yeah, I'm not a nuclear expert. What I will say is that I think nuclear has probably a long way to go to break stigma that occurred a long time ago. Um, and so, there are obvious dangers to nuclear. I am a fan of hydrogen. I think hydrogen could decrease the amount of crude that's used in fuel. Things that concern me and the rest of the world about hydrogen: number one, cost infrastructure is very high when it comes to any type of gas processing plant, LNG plant, okay, CNG, okay, compressed. So preparing gas to be exported for shipment, those plants are very expensive to build. Goldman Sachs built, I think, a $15 billion plant. It's funny. So he DJ'd my birthday at the Surf Lodge a couple of years ago in Montauk, and afterwards or whatever, the CEO, I always draw a blank on his name. I honestly, I
David
can't remember.
Solomon.
What's that?
David Solomon.
Yeah, Solomon. Yeah, D Sol is his DJ name. So he DJ'd my birthday at the Surf Lodge a couple years ago. This is 2022, and he's been DJing around the Hamptons for a while, and I'm well known out there. So, uh, so he DJ'd, and then he gets off the stage, and he must have been in his, you know, celebrity moment or whatever. And I go up to him and I go, "What are you doing with that $15 billion loan on the LNG Freeport facility that you built in Corpus Christi? It's one of the largest commercial loans in the world." And he didn't even know what I was talking about.
Josh, I think we have breaking news here. You said that David Solomon DJ'd your birthday
I have a
at Surf
picture.
Lodge.
I have a picture with him.
Get
Okay.
out of here.
And anybody that knows me on Long Island, in New York City, I've got a pretty big presence on Long Island in the Hamptons. And yes, so that is true. I'm not talking poorly about him. I think he's a great leader. I think he's done a lot. It just goes to show though that the energy sector has been undercapitalized, and a lot of that has been due to fear mongering by hoax or green initiatives. Now, I believe in solar, although I don't believe that solar farms should be built to the detriment of agriculture, which is going on. Okay.
Sure.
I do think that solar plays a pivotal and critical role in high density areas, urban areas. And I think that needs to be better exploited. And I do think there's a balance between diminishing Mother Nature in the dirt or the soil and sun. But I hate to say it, right? A solar farm, I'm anti. Okay, I'm really anti solar farms. I love solar. I'm anti solar farms. Okay, so now let's go to EV, right? Electric vehicles. I think they're going to play a huge role in the future. That said, to think for 1 second that EVs don't consume electricity, which consumes gas, coal, or nuclear, is foolish and naive. Okay, so I'm glad that we got rid of the subsidies, and I understand why Musk who I have a lot of respect for, got mad at Trump, who I also have a lot of respect for. So I understand why the two had their qualms, but ultimately I believe they've come back together in a way that is more conducive and better for everybody. Now, but EVs are going to play a huge role in the future, but that's only going to drive demand for gas up because it's going to drive demand for electricity up.
Right.
Now, gas is always going to be your dominant supplier, and I do think that gas will play a very pivotal role in decreasing the reliance on crude oil. But that's not going to happen in our children's lifetime, okay? Because hydrogen plants require upwards of 400-degree Fahrenheit to get hydrogen as a chemical into the state that you want it to, so that it can be transported. that creates terrorist threat and risk, and that's a real thing, very very real thing. So I think that as we gravitate more towards uh, smaller refinery or more compact refined solutions. Marcus Lamb, I think he hit the nail on the head with Sky Quarry. That's an alternative fuel that I can get behind. They have a technology they've yet to exploit that allows them to crush asphalt shingles. And Marcus is one of my best friends. He's one of my mentors, but they have a technology that allows them to take asphalt shingles off roofs, and 13.5 million tons of asphalt shingles get deposited into landfills every year. Okay. And this has been going on for a long, long time, many, many, many decades. So 1 ton of asphalt shingles can yield the equivalent of oil that can then be reused in asphalt, and then it can, separate other particles like limestone, and those can be reused. So I like stuff like that. I think coal is going to come back, and coal will never have gone away, although it rests in the hands of a few versus being spread out. So that had a detrimental impact on the Appalachian Basin, Kentucky, West Virginia. West Virginia has so much coal and so much gas that I think that to me, gas is clean energy. I think windmills are stupid. I just think windmills are really stupid, and if you took the subsidy away out of them, you would get no benefit. So, and they wouldn't be built. So, I mean, that's my view. I'm into hydro, water as a source of energy, but that is scalable. I just think that there's a lot more innovation that can occur in using water as a source of electricity, and I don't think we've even really scratched the surface on it. So,
That's incredible. I think it's always very interesting to hear from an owner operator, what's happening in the growth of the energy industry because we hear so much about it. The main thing right now being, for at least us in the Northeast, we have a ton of high rising costs in the energy sector with petroleum, and propane, with, propane being the dominant force in the Northeast. I know people in the Boston area are getting really pissed off with, energy prices now skyrocketing. If it was up to you, what would you do to help solve the energy crisis in a lot of areas in the country where we feel like right now as the
in the
consumer we're
Northeast, I'll
being
tell you what I do. I'd go and I would expose Kathy Hochul for the fraud that she is. I really hope that the current administration at the federal level does that, although I believe that the next governor coming in, Stefanik, who is a Republican, and I'm not, just let me be clear, I I favor Republicans in the current political landscape. I'm neutral, and I think that the Democrats need a change in leadership, because the buffoonery that has gone on over the past few administrations is psychotic. So I think that they need a change in leadership, and I think that they need a change in leadership so that they can have serious people making really good decisions on behalf of the people they represent, and that's not going on right now, unfortunately. And I hope that it returns because I believe that America thrives best on a two-party system. So, I'm sorry, I got a little sidetracked there. Your original question was how to solve the climate crisis. Eradicate politics and bad politicians that hold back and allow these things to occur, because you have corruption in the Northeast, Massachusetts, Maine, New York, New Jersey, Connecticut. You have corruption at the political level, and you've had it for a long time. Same in Rhode Island. You need to get that corruption out of there. Why? Because New York State, you can't frack. So that makes it very unattractive for major gas companies to come in, even though you're sitting on incredibly prolific pockets of capital. At the same time, you can't kill the companies that want to drill that, and they have. They have done that. So it's all self-created. And so with all these green hoaxes being, for example, I love trees. Okay. A tree consumes 49 pounds of carbon a year. Okay. So why are we cutting down trees for solar panels and now you're robbing the earth of sun? It makes no sense, right? So, and then we're subsidizing that with the taxpayer's dollar. It makes no sense. And then you read your electricity bill. So there's another conundrum. Okay, stop. So now you read your electricity bill and you can't understand it. Okay, because you look at it, and what people don't understand is that electricity bills are state and locally regulated. So it's basically like the piggy bank of the state. So they build these ridiculous rate cases, and they cost the ratepayer or everyday consumers, you, me, anybody that uses electricity. It costs us a lot of money. Okay, a lot. I can't even. It makes me sick to even think about, because I don't
Yeah.
know how much electricity on a U.S. dollar per annum basis. I don't know what that number is. Okay, but I would be willing to guess that at least 50 to 60% of it is some ridiculous subsidy that does nothing to create electric efficiency and allows for a kickback mechanism to occur because of relationships, right? With high up politicians. So I would gut the system, starting with the rate cases of the northeastern states. I would go in, I would create a regulatory body that created efficiency and removed waste. And then I would unban fracking in New York State. Fracking, we have found that all the misconception about fracking in the mid 2000s, it's a bunch of BS. We're hitting water levels so far below consumably drinkable or usable water. Okay, and you're also doing so with very, very, very structurally and environmentally sound casing and cement. So it's ridiculous. So fracking, all you're doing is you're breaking the rock and shaking the rock by putting a lot of pressure, water, and sand down below.
Right.
Why we ban that in New York is because we have a ridiculous and stupid administration. So these things need to change, and we need to remember that if we don't extract oil and gas out of the ground, if we don't do that, our world will be full of volcanoes. Okay, so that's how simple this is. How did we find oil in America? The tar pits in Pennsylvania. So the oil seeped up. Well, we're just going to let it contaminate the grass and the drinking water? No, we're going to use it. And then society progressed.
Right.
So this is how simple this is. And all these go green experts, they're a bunch of idiots. They don't know what they're talking about. They ignore facts that have been out there for a long time, and they've all been disproven. So that's my 2 cents. Take it for what it's worth. But
I do want to shift gears here a little bit before we go into our final leg. Um, your company has done some very strategic transactions in the M&A space that have helped you guys grow at a very, very fast rate. What do you think is the importance of M&A in the energy sector, and how do you think it's going to continue to help improve the energy sector overall?
yep, mergers and acquisitions does not do anything other than allow really, really great small business owners to reposition and restructure themselves to grow and do what they do best. Okay. So that's how I look at M&A being a positive factor, especially when done with like-minded groups. So, for example, right, I believe that we've created more of a culture and a community and partner focused model than anything, right? And so, for example, right, I've yet to issue myself shares. This year, I'm going to issue shares for the first time to the benefit of other people, right? Instead of issuing myself shares, right? So, my child's daycare, right? I'm going to issue them $1 million of stock. Why? They do God's work. They help children develop at very critical ages when parents have work and can't do that for their children, right? So that to me is a no-brainer, right? And having a positive impact on the community around us. So M&A allows us to help the continuation of multi-generational businesses that are small, that have the lack of capital support, and that may have some risk or exposure to losing everything that their grandpa helped build and work for. So that's how I see M&A being a really positive factor without robbing the sellers. or the stakeholders without taking an unequal amount of value from what's being purchased, right? So that's how I view M&A.
Wow. I think that's a really admirable thing to do, to be able to, issue stock and help a lot of people around you. And I always appreciate when I read these stories about, a lot of philanthropic forces behind a lot of these entrepreneurs. And it seems like you're not only doing that, but you're slowly changing the landscape of how a business is operated overall. And I think for AZRH, it's going to be a very bright future. With that said, if you and I were to pass away tomorrow, what would be one message you'd want to give the world as to what it means to have faith in business and doing business practices with the right intentions?
Yeah, I think that if we were to die tomorrow, I'd want my tombstone to read that he did everything he said he was going to do. So integrity, being a man of your word, doing great business, putting yourself last, putting other people first, helping people, giving it your best shot, and helping everybody win. Yeah, that creating purpose for those that need help creating their own purpose, but are on the right path. So
It's been really a transformational journey for myself and my family. My wife and I, we got married back in 2022 when we were still in college, and faith has played a really strong, crucial part of our growth as a partnership and as a marriage and as one body. And I think that there's a lot to be said with the power of God in business, and how it continues to lead us every single day to make our decisions because there is a plan for us and there's incredible things for us ahead. Um, how has faith played a role in the way you've operated throughout life, and how has it played a pivotal role in your career?
yeah, faith provides me with clarity. God provides me with empowerment and the ability to see clear and recognize right from wrong. Um, God allows me to connect with other like-minded, faith-based individuals to make a difference, um, for those that need our help and those that don't. And God walks with me everywhere I go, every day, every step of the way. And that is to be said with all of our partners. And so that has created something really special. And I see a difference because it allows us to grow faster because we attract people that want to work together with us that may need a little help. And so some really great people. We built an incredible team focused around faith, passion, and um, the ability to get it done and execute. So it's been special, and God has been with us every step of every day.
Josh, it's been wonderful being able to talk to you for this past hour. I really appreciate it. If there's any
Yeah.
final thoughts you'd like to give to our viewers, feel more than free.
No, look, I always make myself available to anybody. I try not to be scary. I'm a passionate guy, but my phone number is 917-584-7042. The best email address is josh@controlleddev.com. That's josh at controlleddev.com. The best way to learn more about us, the best website that I reference is oilfieldservices.ai. um and yeah, I just try to make myself as accessible as possible and be as transparent as possible with prospective potential shareholders, as well as be available to those that could use a little advice. Always working 24/7, 365. But my work also entails being a great dad. So if I'm not able to get to you, it's because I'm focused on being the dad that my child needs. So
This has been the first episode of our series with Josh Cohen, CEO of Oilfield Services, ticker symbol AZRH. Josh, thank you so much for joining us today.
yeah, absolutely. And Vision Oil and Gas is that's our operator. So I
Vision
appreciate it,
Oil and
Jonathan.
Gas.
Thank you very much.
Thank you.